All right, nice. So the first paper we're gonna start with is we'll go over GJ here in a minute, bro. But let's start with the Euro USD. I've got it marked up a little bit already. But do you all have your moving averages set up or no?
Nah.
All right, cool. So
Are we supposed to?
on TradingView, yeah, like what I mainly use to do like chart work is TradingView because it has like all the tools I need. Plus their charts are real clean in comparison to like MetaTrader. And then not only that, like this is mobile friendly, whereas MetaTrader isn't too mobile friendly for real, for real. I don't like the mobile app for MetaTrader at all. But
Wait, there's a mobile app for TradingView?
you can just go to your browser.
Oh.
And it looks the exact same as right here. So when you're adding your indicators on TradingView, by the way, you can get this for free, or you can pay for the data if you want to. I pay for a little extra data, which it's worth it, I guess, I suppose, but free works just as well, I suppose. So you don't necessarily have to pay for it, and you'll still get all the same stuff I have. The main difference is your data might lag just a little bit, like it would like on a demo account or something like that. But I found out even this I guess this arena or this platform is still a little bit quicker than the demo platform of the MetaTrader. So now when you're adding your indicators, your moving averages, all you gotta do is just click on the indicators, and it's got different things that are popped up already. But what we use is just 4 different moving averages. The first one is an exponential. Just click on your moving average exponential, and it should populate something like this. The original length of that is going to be like a 14. You want to change that to a 7, and then under style, you can change the color of it, the width of it, the line type of it, whatever you want to do, pretty much.
7 is Lucy, right?
Yeah. The next one is a smooth moving average. So you just go back to indicators, type in smooth, and just hit OK. Let's see. The length of this one is at 21. And then of course you can change the color, style of it however you want to. The third one would just be a moving average. So you go back to indicators, type in moving average, boom. That's going to be the last 3. So you can actually click on that 3 times, hit OK, double click on it, change the color of it, but the length is going to be the 50. The next one's going to be another moving average. That's going to be the 200. And then the last one's a 400. So again, the colors that you have them doesn't necessarily matter. You can customize the color however you want to, the thickness of them, if you need them to be a little bit thicker or whatnot. Those are the first indicators that we use or whatever, just a couple of moving averages. I use the Trader's Dynamic Index, or the RSI. So to get this on TradingView, you just type in TDI. I use this one. And then you don't have to really change anything with that one. It looks just like this. I will put the RSI on 7 though.
Wait, which TDI did you put?
The middle one, gold mines right here.
Oh, okay.
On this setting, change your RSI though to 7. Alright, so basically you've got what we're seeing right here. Now, I don't always use the RSI or the TDI indicator. I use that as like an extra confirmation. So basically, I'll analyze the chart first and gather my bias first, and then like I'll double click to pull up the RSI to see, the TDI to see if it's oversold or overbought, and it's looking to reverse. So, and that's how I use that. The next tool I want to show you guys how to add to your chart would be the dollar overlay. So if you go to compare, click compare, it's going to say compare or add symbol. You want to do add symbol and make sure overlay the main chart is check marked. Okay. Now you can do this for any symbol or anything like that, or any currency pair that TradingView has basically. But this works for the major currencies in Forex that goes against the dollar. So you just type in DXY, US dollar index. And once you click on it, it's already overlaid. Now for it to load, you have to start on the day chart. So all this right here, these Japanese candlesticks, that's the dollar index. To change that, you just basically double click on it, go to style, you can go to candles, hollow candles, line, or area. If you're looking for divergence, if you know what divergence is, this is what you're looking for. Now you would click on line chart and then basically use this line graph as you would, let's say, an RSI or something like that. So you're looking for that divergence. You would draw your, that's a real clean one. You would draw your divergence however you want to do it. This isn't true divergence, but I'm just showing you guys. So if you saw divergence of this line in opposition with this, then you're looking at a prime entry so forth. Now, this type of divergence is called SMT divergence, and it's a concept that we'll be going in depth on later down the road once you guys have the basics. And this is something that you can use to help gather some more bias and so forth and things like that. But for now, we've got your TDI and your moving averages, and that's really all we use. All right, so a couple of the tools that we use when we're doing chart work over here on TradingView. The first thing you want to try to set up is your horizontal line. So when you click on your horizontal line and you go to style, we can have a template set, so that way you don't always have to mark up what's a monthly or mark up what's a mid-range and quarter points and so forth.
Wait. Oh, are you talking about just as far as like the color and stuff, or are you talking about, I mean, how do you do? Never mind, let's go ahead and finish. I'll ask you to get done.
Yeah, this is like the colors of it and everything. So like when you just... Oh, let me do that one more time. So like you'll just horizontal click on the little arrow over here on your first box. It's got your trend lines, your horizontal lines, your arrows, your rays, all that stuff. Okay, so any kind of like line tool that you're looking for, that's where it's at. We use the horizontal line to mark up the quarters theory. Now this line, this is where you change your colors, the thickness of it, the style of it. Excuse me. And this is where you can label it. Now when you label it, you can label it mid-range and have your quarter point or your monthly a different color and label that as monthly. And that's what I did. Basically, type in your mid-range, come down to template, and just save it as whatever kind of template you want to save it as. I saved it as mid-range. And then you hit OK. So that way, whenever you're marking up a chart, and you just come over here to your horizontal line tool, you click on it,
and hit mid-range and then drop it wherever.
Yeah, well, you can drop it wherever, but then when you come over here on this last box right here, it's going to bring up the templates that you already have. So it changes the color for you, it changes everything for you. See what I'm saying?
Okay. Yeah.
So it's
yeah.
Hell yeah.
I got you.
That's a real quick, easy, simple resource to do. So that's the first tool we use. The next tool is the Fibonacci retracement, which usually this box starts out like this, looking like a pitchfork, and it has a little drop down arrow, which just has all kind of like retracement tools and stuff like that in it. What we're more focused on is right here, this retracement, and then now your Fibonacci isn't going to look like this, so you'll have to customize it a little bit with your settings. Alright, we did a video over this before, but I'll go over it right here real quick. You want your zero to stay. You can, if you uncheck a check mark, that makes that ratio disappear from your screen. Now we don't need all these different ratios on the screen. It becomes too cluttered.
Hold on one second, bro. I'm trying to sorry, I'm trying to like do this while you're, damn it.
Oh, you're fine.
While you're talking, I don't. Okay, so I can go into my Fibonacci. It's okay. How do I get it to open up? Oh, customize?
Yeah.
Okay. Alright. Shit. I don't think I'm doing something right. Okay, I'll go back and watch this or something.
Okay. So basically, like when I'll start from clicking your fib tool, just fib anywhere you want to, and then this little toolbar comes up. You can hit on the settings, and that pops up under style. So you've got all these ratios should be checked at first. I unchecked all these on the last row. I unchecked the 2618, the 3618, the 4626. I mean the 4236. I keep the 1272, and then I add in the inverse expansions of the 618 and the 272. So
That was like profit extensions.
Yeah. These are like your take profit extensions and so forth like that. So basically now you have extensions below and above. So these help, these right here, these two help you with your entries. The positive two help you with like your take profit extensions and stuff like that. And we'll go deeper into that and stuff like that. So you can have these all the same color if you wanted to. You can keep them the default color if you want to. It doesn't really matter. But what I did was the 618. Oh yeah, you have to add in the 786, and you have to add in the 886. Okay. The 618, the 786, and the 886. I have those set at different colors because those are typically zones where I look to enter the market. So you want to have those kind of like clearly marked in so that way you can readily identify them quickly. You don't always have to look and strain and things like that. You can just hit OK on that one. You don't have to save a template on this at all because once you get done customizing it, that's what it stays at. Alright, so we got your fib tool set up, horizontal line set up. Let's introduce you to some more tools. This little brush right here, if you click the drop down, it's got your rectangles, it's got your ellipses and your circles. We use the rectangles for like when we're drawing our order flow blocks or your supply and demand zones, or if you're just to highlight something basically. So that's good to notate where that's at. Under here, the text, just got some different tools. We don't really use that too much. Here's the next thing that we use a lot though. This looks like the harmonic pattern. On this drop down box, it's got the XABC pattern. That's what we use for your Gartley, your bats, and any kind of like harmonic that's derived from those two. It's got its own separate cipher pattern, which we'll get into ciphers deeper in the year or deeper in the month, just depending on how fast you all get there.
Quick question, bro. This right here, so you're on TradingView, you're not on your MT4 right now.
Correct. I'm on TradingView. I use TradingView. That's probably why. TradingView, bro, is what you really want to use for your chart markups. The reason why is because it offers a cleaner chart on the mobile as well, and it has all these tools that you can still access from your mobile as well. Whereas, TradingView is where you want to do your chart work at, and then you take your orders on your MetaTrader 4 platform. I used to do a lot of chart work in MetaTrader 4 program though, so like there's certainly nothing wrong with that, but it's just all my tools are right here and it's a little bit cleaner on TradingView.
Okay, yeah, that's what I'm trying to why y'all stuff I don't got, but okay.
Now TradingView, it's free if you want to use it, bro. It comes with a few pop-ups here and there when you use the free version of it, which is certainly fine.
Okay, nothing. So is it on the phone? Is it TradeView Markets or what?
No, it's just go to your browser, tradingview.com.
Oh, okay. I thought there was an application for it.
No, I wish.
Oh, okay. So you trade from your mobile device too?
I won't necessarily place too many orders from my mobile device, but if I'm like monitoring or going to look for an entry, I'm on my browser. I don't really use the mobile platform too much on TradingView. I mean, on MetaTrader.
I got you.
Hold on, let's see.
Is there a okay? Let's see.
What's up?
No, it's not for. So there's a way I can. There's a way obviously I can link my account to this, right? So I forgot to do it.
All right, so let's see. What we use on this tool right here mainly would be like the Elliott Wave Impulse and then the Elliott Wave Correction Wave. Now, once we get deeper into Elliott Wave, then you'll use like the triangle wave, the combo wave, and the double combo waves and so forth. But for right now, we need to get the impulse and then the correction waves down. Oops. Again, like these are just simple chart drawing tools. These aren't necessarily indicators or anything like that. You see what I'm saying? Like you can change the color of these to whatever you want, customize it however you want to, basically. When we do start going though, over here on the left, you got some more tools, which we have a watch list, and these are the pairs that we'll be watching basically: the Euro, the GBP, odd USD, US CAD, GBP odd, USD CHF, and then USD JPY. All right. The reason why we're going to start with the majors is because, again, we can compare against the dollar index and look for divergence, and then that's what's going to help you into your trades and should help you limit your drawdown a little bit too. So you got your watch list. Not only that, you've got like a little chat section, or people looking at the same charts as you. Here's their ideas and so forth. Like it's just a nice little thing to have. Any questions so far?
So I'm still trying to set up. I'm trying to set up trading view on your stuff. Like,
Okay.
so I'm listening to it just and I'm looking over back and forth. I get the watch list and all stuff is basically just a kind of similar on P4, so I get that.
Yeah. I got it recorded and stuff like that.
Okay.
Oh yeah, to change y'all's backgrounds and stuff, you can just like right click on the chart, go to properties, and this is when change your styles of your candles. Now this is really cool because it's got wrinkle bars, it's got all kinds of different types of candles and bars that MetaTrader doesn't necessarily offer without it being an indicator or something like that. You know what I mean?
Yeah.
So it's real nice and clean as well. Change your background, all kinds of stuff.
Okay, a quick question before you, I guess, get too much into this. I'm excited. I kind of want to follow along. So I have TraderView pulled up, right? But
Right.
how do I link my account to it?
Oh, no. You don't have to link your account to this. This is just where we do chart work.
Okay. All right. Okay. I got you. So you do chart work on here, and then you just go back over to MT4.
Correct.
And kind of
just place the trades. The reason why I do chart work on this is because it's a little bit cleaner, and I like the data streams. Now you don't have to pay for this, and if you wanted to though, like, bro, you can link your actual broker to this.
Okay, that's what I was wondering. I got you.
You can use FXCM or any kind of CQG broker, which the only one for us that's available right now, I believe, would be Owanda.
Okay.
Which they aren't too bad either. So, and then you'll be able to place live trades right here and everything. Like I use this for demo.
Okay.
For demo and just for chart markup. So
Gotcha.
it's mobile friendly. That's why I use it too as well. So
okay.
Let's see. What did we cover so far? Elliott Wave tool, harmonic tool, fib tool. All right, so yeah, that's basically the tools that we use. Yeah. Hey, yeah. All right. So let's are you on your computer right now, Cole?
Yeah, I'm on my computer.
All right. So what we need to do is add all of these symbols to your watch list.
Okay. Hold on. I fell asleep before that pound move, bro. That
Did
pound
you?
move. That's ridiculous.
I feel that gap.
I closed early because I was holding it for like 2 days in negative.
Oh yeah. No, it closed. I got called out on some large calls and some stuff too, but luckily they didn't close my account. What the hell is that? What am I doing? Okay, yeah. So I'm trying to gotta minimize this. 1 second here. What the hell I was doing? Okay, I got this up now. I just need to. Okay. All right, go ahead. Well.
Okay. The first one you want to add to your watch list is, of course, the Euro USD.
Okay. And okay, hold on. Let's see.
And to add your symbol, all you do is click over here, add symbol, and then just type it in.
Wait. Okay, hold on. So, I got you. So tools.
Yeah, under tools, on that first one where it's looking like a search, if you click on that, it's going to pop up some kind of watch list.
Yeah, watch list. I got you.
You got any pairs in there right now?
I'm only SPX, SPY, and DX.
All right, you can, if you hover over each of those, there's a red X to the right, and you can delete those 3.
Okay, there's more. There's Dow, DXY.
Yeah, you can delete. Keep the DXY.
Oh shit. Oh, well, I gotta get it back.
That's fine. We'll add it.
Okay, here's Euro USD, Bitcoin.
You can delete
I don't know what
Bitcoin.
CPI is.
Okay, so first one is the Euro USD.
Yep.
You can just type that in up here. Type in Euro USD. Click on it. It's going to add to your watch list. The second one is the pound dollar.
Yep.
Third is the Aussie dollar. And then the fourth would be the dollar versus the Canadian dollar.
Okay, GBP and C. Damn it. GBP, CAD. Okay, and then yen.
Yeah, USD yen.
USD yen? Are we not doing pound yen?
Yeah, we can. Yeah, that's the last one. Pound yen.
Oh, okay, my bad. USD yen. Okay.
And then
Are you
pound
doing
yen.
it in a specific? Okay. Order on purpose. I got you.
Mhm.
Okay.
And those are the major pairs that we're going to be watching. Now you can customize these later once we get further with the training, or however you want to, so that way you can add whatever you want to trade, like oil, gold, or whatever. Or we may just add in a couple of commodities and stuff like that later down the road, anyways. But just to be, to look for these setups, in a comfortable amount of setups, you really don't need that many pairs, honestly. Now, so that's why we start with these.
Okay, so I have Euro USD, pound USD, pound Aussie, pound Canadian, USD JPY, and you said I can add on GBP yen on there as well?
Yeah. All right, so at the end of this webinar, I'm going to give you all some homework, all right?
All right.
I'm gonna have you all. What I want you all to do is basically for the homework is mark up the quarters theories on each of those charts to have them
Oh,
ready.
I can't even. I was gonna ask you about that after you got done doing this.
Yeah, no, we're gonna go over it over quarters
Okay.
theory. Don't get me wrong. We're gonna go over quarters theory because I figured
Before
some
you-
people.
Before you go over it too, I wanna just tell you my interpretation of it,
Okay.
right? Just because I want to make sure that I want you to tell me where I'm getting it wrong at instead of me trying to because I went back through the PowerPoint and everything. And I think I don't understand one point of it. So
A lot of people get confused as far as the pip counting of it.
okay, mine's not really the pip. It was for a second of the day. I was just acting slow for some reason. I marked it up before, but so my issue is getting to. I got the PowerPoint still pulled up right here. So let me see where I was at. The multi-chart, right? The second time you do the weekly mid-range placement, right? So I have right now I have JPY marked up, right?
Right.
And I have it marked up as 1 second here. Let me
Was it GBP JPY?
Yep. Let me see 1 second here. Do this.
Look at this.
All right.
I forgot I even had this marked up.
JPY.
Yeah, like this. Look. Oh my gosh, I missed a hell of a move.
That's what I'm saying. That's what we missed this morning. Well, I missed this morning. I was in it, but actually it called me out. So.
When you come look at my screen, man, you'll see we missed a hell of a move.
Yeah, I'm looking at it, and I knew. Okay, that's the thing. So it retraced that big drop it did Sunday.
Yeah.
Okay, but this is a. Oh, let's see. I can't. You're in trading view right now? Okay, I can't even show you mine.
Yeah, I'm trading view.
Okay, so I'm gonna read mine off to you, right? So I have my first quarters set up right. I did it from the 137, I think. So I basically have 147 as my top quarter level.
Okay.
Right.
Yeah.
And I have my bottom one is 127. Right. That's 2,000 pips. Right. So.
Yeah.
And then I have my quarters set up every 500 pips. Right. So
right.
4 quarters. And then I have 200 pips intervals between each one, right? Because that's the the mark, right?
Right.
Okay. And then I have so once that's the first quarter theory setup, right? That's the first one. I have the middle point too.
Right.
My issue is when you go to you do the second markup, I guess, where it says go to your swing. See, 1 second.
Your weekly midpoint?
Yeah, is that where you go to the very you go from the left to right, your low of the whatever swing point it is, right? So which was the low
right.
for JPY? I had that one marked up at 124, and then it said go up 2,000 pips from there, and then draw a rectangle box.
Right.
So okay, so if I go to 124, right, and then so that was right. I wasn't sure that was right or not. Okay, so 124, and then I go up 2,000 pips, which will put me at basically 1 second here, 143 essentially.
124. You going up 20 cents, virtually 20 cents, basically. Okay, so you should be at 144.
144. Excuse me. Yeah, 144. My bad. I'm looking right here. It's 144. Okay, so 144. Okay, so I think that was almost right. Oh yeah, okay, that's what I have. Okay, that's what I have on my screen actually. 140. Yeah, 144. So I did that right.
Right.
But my confusion is from there. I don't understand. I draw a box. Over there. I don't get it.
You talking about the rectangle box? You're on the daily chart, right?
Yeah, I'm on a daily right now.
Okay, so. Oh, okay. All right, I understand your confusion. So let me go over it real quick.
Okay.
So let's pretend what I typically do is I'll mark the 1,000, 2,000 pip range, and then I just divide that in half. And for the most part, that's as far as I'll go. Now you can cut these two halves into halves again and then that's when you get the 4 quarters.
Wait. So you're okay. So I had JPY,
Mm-hmm.
right?
Mm-hmm.
I used 2,000 pips, right, and I cut it in half.
Right, and then cut that in half. That's typically
Okay.
where I would stop at as a swing trader. Okay. Now, when you cut those 2 halves in half again, that's when you're creating the 4 quarters within that whole 1,000 to 2,000 pip range. So what happens is, like if I cut, are you looking at my screen right now?
Yeah, I'm looking at the screen.
All right. So from this yellow line to this yellow line is a 2,000 pip range. Okay.
Okay.
This red line is the halfway point. So this is 1,000 pips. This is 1,000 pips. If I cut this one to this one in half,
Yeah.
you see where these candles are struggling at? That halfway mark should be another 200 and well, actually 500 pip range, which would be the halfway point. You feel me?
Okay.
So
yeah. So what was the last part you said? So 500 pip range, and what was the last thing you said?
500 pip range, cut it in half. These candles, that's the halfway point. Let me go ahead and do that for you. I'm gonna show you real quick.
All right.
We'll change this to green real quick, for instance, and then halfway roughly between this point. All right, so check it. From this yellow line to this green line is 500 pips. That's your first quarter. From this green to this red is another 500 pips.
Second. Okay.
That's your second quarter, but that's your first half, your first major half quarter point.
Okay.
You see what I'm saying?
Yeah, I see that.
And then if you do the same thing to this two, then that's how you have your whole quarters theory within this 2,000 pip range.
So you don't even mark up the 200 pips thing then?
Correct. It's sometimes it's not necessary. Well, a lot of the times as a swing trader, it's not necessary. But if you're more of like an intraday trader or something like that, cool. Now, let me go to the month. We typically do. Damn, I missed that hell of a move, man. I knew it.
Yeah, man, I fell asleep, dude. I fell asleep on that shit.
Man, I missed a hell of a move, dog. Sick about it. Cause I had it marked up and everything, man.
When I missed the GU trade.
Yeah. All right. So what we're looking at right here is the actual quarters theory I use. Like I said, I just use the 2,000 range levels and then the halfway point. That's typically all you're really going to need. And also it keeps the clutter down on your charts a little bit too.
Yeah, come on, marked up hella.
That's what I know. Now, after you do your monthly and your mid-range levels on your monthly and your weekly charts, or you can just stay on the monthly. On the daily chart, this is where you're using the rectangle shade boxes. So the reason why you're using the rectangle shade boxes is to basically all you want to do is just highlight more recent areas of support and resistance, pretty much.
Okay.
And that's all you're using for the
box.
Yeah, the box for it.
Okay, so I got the boxes placed based off of like so you place the box wherever there's support and resistance. There's nothing like.
Eventually you'll be moving these boxes though into order blocks, and that's what this is down here, and that's what this is up here. They're order blocks.
Okay, so as of right now, like I said, I'm on my chart right now, right? I'm on the day chart, and from this point here, I should be dropping rectangles. I drop rectangles over support and resistance lines. So I would drop one at 137, essentially.
Is that where your next key level is?
My next key level. So my next key level is wherever the market's going, right?
Right.
So the market's on a downtrend, right? So my next key level would be, is it when it hits that key level, or how do I know when it's in the key level?
When it's okay. So you look left.
Yeah.
To know when it's in the key level. So this has to do with institutional order flow. Now let me finish. With this part right here then.
Okay.
So how you want institutional order blocks and institutional order flow, they take place around these key levels.
Okay.
All right. These key levels hold numbers. That's why we use whole numbers are institutional numbers.
Key levels. Okay,
Yeah.
I got you. I was looking at, okay. I got some lines in my damn chart.
Yeah, your mid-range and your monthly quarter point levels and things like that. Those are key levels with institutional whole numbers. So when you see price being rejected around these whole numbers, there's an order block typically that kicks off if you see a nice strong trend direction or trend change in the opposite direction.
Okay.
And that's why we use these as like targets for take profit and entering the market, because we expect price to react a certain way around these points.
Wait, so I should have so 120. Hold on one second. Let me make sure mine's. Oh, okay. So I had a 130. Well, 137 is where I had a line at, but that's like for a 200 pip zone, like 200 pip line.
Oh, okay. Yeah.
Wait, so but why is? Okay, I think yours is marked at a different time. So at that point, I should look for an entry or right on.
Exactly. So you talking about right around $1.35 or $1.37?
137, yeah.
If price breaks up above that, the 137, yeah, you want to look for your long. But
okay, so it's a downtrend and it broke up above that 137, then you said take a long.
Correct. But honestly, looking at I'm on the daily chart. I'm not too sure what chart you're looking at.
Yeah, I'm on daily.
Okay. So we're in the uptrend right now. This is the beginning of the uptrend.
Mm-hmm.
So what we could be seeing is an A, B, C correction. And on that C termination point, if price breaks below this, it's going to be this next mid-range, which is also, or the institutional order block is, which is below this order block is a lot of liquidity. Now, institutional order blocks below or above them is a liquidity pool. That liquidity pool is formed by people's stop losses, people's pending orders, and so forth. So, for instance, if I was a broker, and I know we was going on an uptrend, right?
Mm-hmm.
These moves are created by these liquidity pools. They'll reach down in here, gather that equity for these moves right here to play out over time. Okay.
Gotcha.
So if you're able to identify where the next one is, then you're able to say, hey, it should pop back up with like limited to no drawdown. Now, within these moves though, the market leaves these voids of ranges. This is called a range, okay? A range of void. I'll say that backwards. A void of range. And what happens is these pauses within this trend are levels that the retracement will slip to.
Okay.
All right. So looking at right here around this monthly key level is where I'm expecting for this ABC correction to end. And by looking at this gap down that never crossed below, if we fill this gap down with a bearish candle and put this bending top right here, and now we have this bullish candle, that's going to be a 3 candle formation. Actually, let me find out for you, man.
So I did my quarters anything wrong? Because my lines are, I'm looking at your lines, and mine, for example, is I have one at 140, the next one at 142.
It doesn't necessarily mean you did it wrong. Because, like I said, technical analysis, guys, is going to be based off people's personal psychology. Not only that, I had this GJ marked up like weeks, months in advance. You see what I'm saying? So when you all mark yours up, you're all using more recent points than I am. So it could be perfectly fine.
Okay.
Now, look at this morning star. You see this little doji, and then you've got the nice boom right here?
Yeah.
Or, for instance, let's look at it.
Oh, right there.
Well, this right here.
Oh, yeah.
This bearish candle is the gap. Here's your doji, your spinning top, and then here's the move, right? looking on the daily chart, let me zoom in.
Oh, you.
If you was able to visually see a bearish candle right here, here's your doji or your spinning top, and here's that bullish move.
And now it's just uptrend.
Exactly. So we're typically in an uptrend as we already are. Here's the three candle reversal pattern. So what you essentially want to see now is for a retest to come back down to this area.
Yeah.
That fails. Okay.
Okay.
In order for it to be valid, it has to be tested. Okay, so this is the first time. This is the first low. So it hasn't been tested. Now let me click to the 4-hour chart, and so I can really get in detail with it. All right, so it's finding support on our 400 moving average, right?
Yep.
So this is the low from the opening of the week, or actually, yeah, opening of the week, or whatever. You've got Sunday, Monday, beginning of it.
Oh, okay. Sorry, son. I know I'm asking other questions and shit. But quick question about the quarters theory. Do you count like the low or whatever, the swing point low, swing point high from the actual wick or from the actual candle?
That's a good question. Whenever you're doing your trend lines, whenever you're drawing your trend lines, whenever you're doing any kind of price action, you always want to use the tip of the wick. Because
Okay.
the reason is because in order for a wick to be created, it means price had to go down there. Okay, so that means price, that's a valid price. And what happens is, let me see, if you draw wick to wick instead of body to body, you leave room for certain setups and things like that.
And your stop losses, right?
Yeah, setups and stop losses.
Okay.
Excuse me. So not only that, let's say I'm trying to look for this setup, man.
I don't know if I'm on the day chart too, bro, and my Luciano theory looks different than yours.
I'm on the 4-hour right now.
Oh, okay. I just want to make sure mine's matched up to yours.
Oh yeah. Okay, so here's a prime example. Another reason why we use wicks is for this right here.
Oh.
Y'all see that?
That's a beastie one.
Yeah. So let's walk you through a scenario. Let's say if we were using the bodies of the candles as like the set low or whatever, right?
Yeah.
And you've seen this pullback. Typically, what people will do is they'll go ahead and buy. All right.
Yeah.
Not realizing that it's not this. The close of the body right here isn't the low. The tip of this wick is.
Yeah. So that way, based out if the retest is going to be that wick.
Exactly. The retest is going to be at the tip of this wick. So that's when you begin to read the price action of your candles, and then you get in properly. So that's why we use the wicks and not necessarily the bodies of the candles. Because I promise you, on a pullback like this, people bought. I promise you, especially with this second candle being little wick like this, and went up, people bought heavily, bro. And then what happens is, exactly, it came back down here and retested all the way down to this test and not the bottom of the candle.
And you can kind of, like, on the left side there, like it broke through that support.
Right, exactly. Another thing is, from this high to this low, anything that's traded within that range, this is called an inside setup. It's a nice candle formation. So basically what you do is, let's say if you're expecting this to be a bullish inside mother bar, you set your stop loss about 10 to 15 pips below this low, and you can set a pending order about 5 to 10 pips above this high. All right, and then what happens is, look what happens.
It activates when it comes back around.
Exactly, it activates, and it goes on, bro, for forever.
Wait. Can you go back for a second?
Yeah, like this is one of the setups I teach in the training. right here.
Okay.
It's a inside. It's called an inside formation. So basically, you've got your mother bar right here. All right. As long as price, if you think it's going to be bullish, as long as price isn't passing below that first point, or it can pin, but as long as the closes aren't, you feel me, below that low, that's still your valid low. And what should happen is, if you draw your trend line properly, or even if you just draw a trend line, you'll begin to see that, hey, it's an inside formation. Price is trading higher and higher away from this low of this candle.
I got you.
Set your pinnings at the high, so that way, when it gets up there, boom,
It takes off.
takes the fuck off, man.
Yeah.
Now, most inside formations don't take this long to play out. I'm just going to let you know.
This is the 4 hour still?
Yeah, this is still the 4 hour, bro. This took forever to play out.
Yeah. This is a big,
Yeah. But as you see, the result is tremendous. What else? I missed this whole play, bro. This whole down move right here, I missed.
I'm just shoot, bro. I don't know what's wrong, bro. Like, for the last, 3 months, bro, I've been losing so much money. I did good I thought I was doing good in November, but, the end of November, but I don't know what's wrong with it. Like, I feel like, I don't know. I feel like I'm backtracking, honestly.
You're in the trader slump, bro. We all hit that. So whenever you're day trading and things like that, guys, you're going to run into a slump. Like, it's inevitable. Everybody does. It happens. Now, the longevity of that slump varies from person to person. Okay? Now, the reason why it varies is because people's psychological strength and fortitude varies from person to person. A lot of people can't handle, damn, I'm losing. You feel me? Like, people will go in a losing streak for 2-3 weeks in a row, and that will have a heavy impact on your mentality and how you feel about trading. You see what I'm saying? So you got to control that. The best way to control that, bro, is your risk management rules. Okay. I'm going to teach you guys how to basically calculate what size lot orders you should be placing based on your account equities and so forth. It's all in the training, bro. All in the training. So, and a lot of times, bro, let's say if you do hit that slump, walk away for a week or two, bro. Don't even look at the chart for a week or two. You know what I mean? Like, that's perfectly fine. And, yo, sometimes people need to do that. Like, I'm not going to lie. Like, yo, I got depressed after I lost all my shit, man, in 2015. And, bro, like, I almost didn't trade for, like, a whole year. Like, I went back to the lab, bro, started reading a whole bunch of stuff, working on a whole bunch of material, just to regain that confidence, so to say. You know what I mean? Just to refresh, repolish my skills. And, I mean, it's paid off, bro. Like, I came back, and I picked up on things that I've overlooked, and all kinds of stuff, bro. So, if you need to just, like, really walk away for, like, a couple weeks, do so. I highly recommend it.
Yeah, I got you.
So,
like,
one more time?
After in August, a week trade that I don't know if I put in the chat, but where GU made a wick to the high, and then it dropped all the way to where it is right now. And
you said GU?
Yeah, it was in 2015. Remember that wick that it made to the high?
Oh yeah. Where's it at, man? Right here.
Yeah.
Oh no. Let me go back a bit more.
In December, I think it was December or January 2015, or I guess December 2015, I got raped too. I don't remember what it was off of. Janet Yellen talked about something, bro, and it just dropped everything.
Let me see.
Or raised everything, actually. And that's why I knew about, like, I didn't know about non-farm. I didn't know what that was.
Oh.
Like, I first started training.
Non-farm payroll. There's a couple of things that did that, actually. Non-farm payroll, man. It's
I think it was Euro USD, bro. I don't know. Sorry for Euro USD, but
I know this one killed a lot of people. This one killed a lot of people over the summer.
Well, was that the Brexit?
Yeah.
Oh yeah.
I'm above that thing.
That's the Brexit, man. It's been falling ever since, dog.
Like 130 something.
All right. So okay. So homework, guys.
Yeah.
Those I want you pick 5 to 7 of your favorite pairs. Preferably, use the majors or something like that. Have a more majors than whatever. But as long as you got at least 3 major pairs that you can trade against the dollar index, you'll be fine. Okay.
So that's trade against the dollar index. That's the Euro USD.
Right. The Euro, USD, GBP, odd USD, anything that goes against the USD.
Okay.
Mark up the quarters theories on those charts the best you can. And what's going to happen is either later today or even tomorrow, or let's see, either later today or tomorrow afternoon, I'm going to get back on with you guys, and we're going to compare charts, and we're going to pick up on some more training.
Okay, and so do it on Trading View then.
Trading View, yeah.
Okay, and then also, I still don't have. Okay, so to make sure, so I have my course theory marked up, right? I have everything all the way down to like that each 250 variable, right?
Right.
Now, so what I did, I'm trying to figure out how to explain it. So give me 1 second. So back on the PowerPoint right now. Okay, so I have the quarters theory set up, right? The 25th range for each one. I have the monthly key level, the weekly mid range, and quarterly points, right? Now it says multi-chart analyst quarter theories placement.
Right.
Now it says, so then it says using the horizontal tool, mark the first monthly key level round to the nearest whole number. That's how I went down to the 124, and then 2,000 pips up from there, right?
Right.
And then use the rectangle tool to highlight the key levels. So how many quarterly theories am I putting on there?
Okay, so let me explain. The monthly chart, you're going to mark up your monthly key level.
Okay.
The weekly chart, you can do the mid-range key level.
So how many quarter theories should I have on one of my charts?
You should
Like
have
3?
Yeah, you should have 3 zones of 1,000 or 2,000 pips. So that's okay. So that means you're going to have a total of about, let me see, 1, 2, 3, 4, 5, 6 smaller zones. Okay, but as long as you have 3 zones of either 1,000 pips or 3 zones of 2,000 pips, you're good.
Is that so how many? So I should have one zone total of 2,000 pips though.
Yeah, one zone total of 2,000 pips. That's cut in half. So each of those zones should be cut in half.
Oh, okay. So I think So what I think what I did on the PowerPoint when you showed yours, like the quarters theory and the 20 pip range, and you had like the large quarters.
Right.
So that's just done in total, and then you broke it down going forward.
Correct.
Oh, okay. So if I did the 2,000 pip range, and I did they cut that in half, and then cut that in 4s.
You're good.
Right.
You're
and then
done.
Oh, okay. I thought I was supposed to do it like three more times, bro. I was like, I don't understand this.
As long as you if you create 4 quarters within that 1,000 or 2,000 pip range, you're done. You're done with that whole quarters. Move on to the next 1,000 pip range and do the same thing.
Okay, so I still have a question about the the rectangle box though. So my understanding is I just want to make sure this is right. So if I'm on the day chart, I go over down to like the low, right, which was the 124. That's where the wick was at.
Right.
I go up to the 144, right, and then I draw a rectangle box right there.
No. The rectangle boxes, what you're doing on that is you apply the rectangle boxes after you have the quarters theory drawn up on the daily chart. Because what you're doing now is you're highlighting more recent areas of support and resistance. Okay?
Oh, okay, so I get to place the boxes anywhere I feel like they need to go.
Correct. Anywhere you feel like they need to go. Because what's going to happen is those boxes that you're placing right here, you're going to define those into institutional order blocks based on...
When it hits it again.
Exactly. Based on, different properties once you get to that section of it. And that's when you're going to gather your entry.
So let's just say that I'm looking at on the daily chart, right? I'm looking at the G still, and I say I want the order block between 143 and 144. Is that accurate?
No. For it to be an order
No.
block, yeah, for it to be an order block, here's what you have to have. You've got to have a swing high. A
Okay.
shift away. You have to have either a swing high or a swing low. A shift away from it, and then a retest. Now, I'm going to use this right here. So here's my swing point, right? My
Okay.
swing high. An order block is contained within the last candle before the opposite direction move. Okay?
Okay.
So this single candle right here
Mhm.
is where that order block is contained in. Now remember, we're on the daily chart. So what you do is you highlight that high and low of that candle and drag it over.
But for DJ, after you're done, can you show me how you would have the quarter theory lines? Because I think I might have mine too close.
Yeah, I will. So
Mine look weird too, honestly.
on GJ?
Yeah, because like I have my like the 200 pip intervals.
Yeah.
Like it looks like on the top quarter and the very bottom quarter, it looks like it's like there's no 200 pip line points over there.
All right. I'll mark up quarters here on GJ for you guys. But let's finish this real quick. So what you have is you've got this swing high. The last candle before this swing right here contains the order block. What defines it or what constitutes it as a valid order block is the retest to it that fails. Okay, before this move right here. Now on this retest, it should be in between the 618 and the 886 retracement levels. Okay, now this is a very broad order block if we go to the 4-hour chart. Okay, so here's what we have. Here's that day is right here somewhere. Like 8 candles is that day. I mean, not 8, but 6 candles is that day. So what you want to do now is this is that same order block from the day chart. You can now redefine it into something smaller. See how that works? It's that same rectangle, but now we redefined it into the last candle before the nice move down, right?
Okay, yeah.
And then what happens is if you fib from that high to, let's say, that low, on the retracement, it hits your sweet spot for you to begin to re-enter. Here's your sweet spot. Here's your second chance to re-enter. And then any kind of stop loss goes with structure above this point.
So from that orange line to the blue line is entry point.
I would say from this yellow line
Okay.
to this orange line is your entry. Anything after this orange line, you're going to be looking to place your stop loss.
Okay.
Okay?
Okay.
So
that's right in the 27,500 too.
exactly. So what happened? Exactly. So you add in your institutional order block with the order numbers, with your fib retracement levels, and all that is prime. So what you have is you got this swing coming down, boom. When it retraces within this trend right here, it's rejecting at your sweet spot, right? Not only that, you've got your trend line that still says, hey, go bearish. And you've got your order block. So now you've got all that confluence that says, read the price action of the candles, begin to look for a nice place to enter your sell. I typically place my pending orders about around here. If there's an order block up here, if I feel like this is an order block, I got some pending orders with my stop loss set right above this previous structure. So what happens is, if we're looking at it, price should have activated that pending order with little to no drawdown, and then got the hell out of there.
I got you. Based off your resistance line.
Yeah, this is an institutional order block. So
Okay.
now remember, this is on the 4-hour. We can continue to do that, redefine that order block all the way down to the 5 and 15-minute chart.
And that's how you get the better entries.
That's how you get
Like
your
the best entries.
Yeah, your pinpoint precision entries. So again, take the last candle before the move.
That pinpoint precision entries, wasn't there? I looked on. I didn't see a video for it. Is it just material?
No, there's videos and shit like that coming later. I'm not putting out all my material at once because what I want to get y'all to do is learn each step or the foundations of each concept as best as you can first, so that way you can expand upon it.
Okay, yeah, no, definitely, got you. And then, okay, so for the fib tool, I've never used the fib tool before. I've been trying to use it, so I gotta go back and look at the video how to customize and everything. But I take it from one point. I take it from a high or low, and I just
correct. So
draw it. Okay.
You gotta you have to determine what trend you're in first. So let's go to the most recent real quick. Determine what trend you're in, and you have to have 2 valid points. So basically, this high right here isn't necessarily valid as a high point just yet, because there's no inside return.
Yeah.
What you see, this pause and this pause, that's called a avoiding liquidity. Those are actual levels on this retracement that should happen. Those are actual levels to where that retracement should slip into, find some kind of support.
Oh shit! So when it drops back down, it's gonna retest.
Right.
That 124, 121, excuse me, or what is that? Right there.
Right here, yeah. This is going to be a level where you can look for, hey, price might come down here to test. Now that's after, you know, that's when it's retracing.
Yeah.
It's not. This is going to be another level of where it's going to retest.
Okay.
So what's going to happen is, what we're seeing is a wave 1 in Elliott Wave.
Okay.
Wave 2 is usually a steep retracement into wave 1. So this actually is going to be a level that could be retested and within that ABC correction before the nice push up on wave 2.
Okay. So that's a possible entry.
Right, a possible entry. Now when you're drawing your fibs, like I said, you gotta have 2 valid swing points, and depending on the trend direction. Click on your fib tool. What I'm going to do is use this swing high to this swing low.
Okay.
Your 100 is always going to be your first swing point. Okay.
Wait. Oh, okay. Sorry.
Yeah.
Okay. So.
And then the 0 is going to be the last swing point.
Where's the one? Is the 100 just the one?
Yeah, the 1.
Okay, yeah. And then the 0 is the last swing point?
Yeah. So what happens is, from this swing high to this swing low, you now have an extension all the way up to the 1618. And you see where it's pausing at? Yeah, 161. Yeah, okay. Yeah. That's an extension or inverse extension. You have now two of these lengths, basically. So from this high to this low is like 2 legs from here to here. From here to here, and from here to here.
Okay.
All right.
Oh, okay. I see what you're saying.
Yeah.
Okay.
It basically.
So let's say we want to do. I'm hypothetically, right? I'm trying to mark one up. So I'd mark it up from the 120, 200, right?
Yeah.
Let's say it's an uptrend all the way up to the 125.
Okay.
Great. Right? Is that how you do it?
Yeah. Okay. So now let's get into. All right. So now that we know that we're on a uptrend, theoretically speaking, or whatever, right? And you're looking for here's your A, B. You're looking for C to N, so that way you can find the D extension.
Yeah.
Yeah. What you're doing is fib from low to high. You go with the trend. Your 100.
Okay. No, I just want to make sure I was placing it right. Okay.
Yeah. Go with the trend. Your lows, the 100. Your top is the 0. Now we're looking for C to end anywhere between the 382 and the 786. These are your retracement levels right here.
382 and 786. Shit. Okay.
Our ideal entries is about the 618, anywhere between the 618 and the 886.
Okay. As far as entries, a long.
Right, as far as entering back long. So let's say Let me draw this. Now, let's say price ends somewhere in between right here, right? You have your A, B, C, and you're looking to find what to target, to target to. Your first take profit already is going to be this high right here. Okay. This high is going to be tested.
Okay.
All right. Your second take profit is going to be the actual D extension, and to get that, all you would do is you now follow that retracement trend. You go from high to wherever it ends at. You see what I'm saying?
Shit.
And then what happens is, on these extension levels, those are going to be your TPs. Now, a good TP, look where this extension level ends at.
Right at one of the
monthly key levels.
Mid level, yeah.
So what I would do is just slightly below it, you can use this one.
Okay.
And then you still catch hella pips. You see what I'm saying?
Yeah.
And then that's how you. Yep, that's how you do the ABC, and then finding the D extension.
That's fucking crazy, bro. Okay, and this works on any
currency pair, bro. Anything you trade.
Well, what about time frames?
Any time frame.
That's crazy, bro.
So let's use this one right here. So basically, we'll use this whole example right here. Let me delete this shit so I can show you how it works pretty much. All right, let's pretend that's all we've seen, right? All right, cool. So we can fib high to low to see what kind of retracement we got. It's retraced to the 382.
Wait, you did it from high to low?
I mean, not high to low.
Low to high. Okay, got you. Sorry, I was looking at the left side of the screen. I just looked back and it was already up there.
Yeah, we went low to high. Okay. And then that's how we see what kind of retracement this is. This retraced to the 382. Now, to get where that it should extend or end at or terminate, you fib from high to low of that retracement. And then, high to low. Let me be sure to use the wicks now, okay?
Yeah.
And then that's going to give you your extension levels. You want to look for extension levels around structure, or around like your moving averages, or around your key levels. So what happens is, boom, it reaches right at your extension level, hits your take profit, right? And goes your other direction.
Okay.
So then what happens is you've got your A, B, C with your D completion.
Okay.
And then you just let the market do what it do for a little bit, or you can look to re-enter.
Okay. Now question. So let's say that let's say I want to do a swing. Okay, so what is that? You see the 12 on your I can't even.
Right here.
Go left a little bit. Left, right there. So if you go up,
right here?
Or let's say the high, we have that wick right there. See that wick to the high?
Yeah.
So that I wouldn't consider a swing high, would I?
Let's say if it's like, if you're looking at it like that.
Well, because what I'm trying to figure out is if you go back to the right a little bit.
Yeah.
Where I can't see it right now.
Where this is?
Okay, right there, yeah. No, because I'm concerned. Like, let's say I was doing a trade, right, and I had it. You know that big gap, that was the other day, right, on Sunday.
Yeah.
Like, would the Fibonacci's catch that? Were they like let me know that be worried about that or no?
Fibonacci isn't going to catch a gap. The only thing a gap is its movement that the market or your broker couldn't necessarily capture on the chart because it wasn't open. Okay. Now, there are TradingView. If you pay for TradingView, like one of their packages, though, will allow you to see price action or the candles or market movement of some of this stuff. But now let's say... What'd you say?
Is it a one-time payment or monthly?
It's a monthly thing, but you can pay it by the year or by the month. So, I mean, it's up to you. Now, let's say if you had a short end up here, and you was looking at ABC waves and stuff like that, you would go A... Hold on. Like Elliott, let me mark up Elliott Wave real quick. Start with this. A, B, and then C. Okay. So looking at this, looking at this gap though right here.
Yeah.
Even though it gapped, it didn't cross this mid-range point.
Okay.
It hit support, cool. So you know that, hey, it acted as support. Here's your retest to that support, right?
Yeah.
Cool. It went a little bit higher. So if you drew your trend line, you would know that, hey, this is on a little bit of an uptrend. Here's another retest. That never even crossed anywhere below this point or this point or this point. So you would have got in for your buy and caught that. Now, here's another thing. If we fib from this low to this high, this should be an extension level as well. Let's see. Well, just about.
Yeah, almost, yeah.
Yeah, just about.
120, okay. Wait, okay, and where's the Elliott Wave thing at? Oh, ABC, okay.
Yeah, it's usually looking like this. It usually looks... it's behind the XABC pattern, harmonic pattern. You click the drop down arrow, you'll see all the Elliott tools.
That stuff.
What'd you say?
This stuff's not on MT4. I mean, other pictures. The Elliott Wave.
Yeah, Elliott Wave isn't.
Is that an indicator I can just like get from somewhere, or only on Trader View?
Yeah, this is only on Trader's View. On MetaTrader, you'll just have to like manually draw it, bro. It's crazy. That's why I like using Trader View, because it has all the tools you need pretty much.
Yeah.
Now let's say if we drew from this swing high to this swing low. Here's the extension level, which is a little bit more valid than the previous one. You see where these candles are ending? It extended right here, made that support. The rest of those candles have closed right above or right at the 618, that extension.
And it, oh shoot, okay, I gotta look at it again. Okay. That Fibonacci's go, bro.
Yeah, Fibonacci's
I didn't understand.
Yeah, Fibonacci's dope, man.
Yeah.
Alright, but
I'm
yeah.
about to send you a picture too. Well.
Alright, cool. Now let me show you all GJ real quick. Man, I missed that move, bro. That's crazy. I done had this thing marked up for forever. That's crazy. Alright.
Yeah, I thought I was gonna push lower though, honestly. I didn't really see any I guess that is support right there.
Yeah.
And oh fuck, are you serious, Cole? Oh man, okay. Yeah, I see the support now and it didn't push past it, but okay. I was looking at the GJ. I don't know how I didn't see like that, cause I had a sell thinking it would go a little lower. It was gonna retest it and go lower, and it
I mean, don't get me wrong.
137 mark.
I still expected this low or something to retrace a little bit deeper, but it should pop up again. Now, this is on the monthly chart, guys. Keep that in mind.
Okay.
So, when you came to your markup GJ, where did you start at? Did you start at this point up here? Or did you start at this point down here?
Hold on the monthly?
Yeah, on the monthly, to mark up your quarters theory.
Yeah, let me see where I started. I started
nearest in the recent swing. The last recent swing.
Yeah, the last recent swing. So y'all use right here?
Hold on, my bad. I was looking at my Forex broker. Hold on one sec. I can't see the screen.
Oh, you can't see my screen?
Oh no, I think it's when he was talking, it moved. Okay, so point where you say did I start at? I started at the 126, I think.
All right, let me see. Hold on.
I got Let me double check, bro. Let me look at my.
So you probably started like around here?
Yeah,
Okay.
I think so. Let me look at my thing. I don't remember. That's crazy. I just try to follow the directions as soon as off PowerPoint. That's what I was trying to do it.
All right. Well,
so I think I started.
You could have started
my
it.
mid-range. Oh, go ahead.
I think I started mine at this top point right here because we had already entered into this stuff.
Yeah, that's fine.
So I just started right here, and then I did
the one before the bearish one.
Right here. Wait.
No, lower. The one that's pending on the 145.
Oh, right here.
Yeah.
Yeah, you could do that as a start point. So basically, here's what you do. Let's say you don't have this marked up at all, right? I'm gonna redo my lines for you guys. This is what we're looking at, right? All right. So since price has moved away from this low point right here, I look left just to see how price has reacted around that same price level.
Okay.
All right. It's pinned and bounced off right here, met some support again, broke through, blah, blah, blah. So then that's when I highlight it, or I'll draw my, at the tip of that wick.
Oh, you draw a box right there, or what?
No, not just yet.
Oh, okay.
Depending on where this price is at, this says $1.24.731. I'm going to round that completely off to, was it $1.25 or $1.23.700? Is that what it was?
You round down?
Yeah.
It's 124, right?
Yeah, 124. I did that wrong. Yeah, I want to round to the nearest whole number on the monthlies.
Okay, but it's not like math rounding. It's regular math. Okay,
right.
I got you.
Right. $1.24.700. Boom. Now that looks to be a nice area of support just by looking left into trade right and seeing how price reacted around it. So from that point, I just copy my line, paste it. I'll add 20 cents to that. So it was $1.44.700. That's going to be my next zone. I'll look at this swing.
Okay.
Then I'll look left to try to validate it to see if price really was reacting how it should around that area.
Yeah, and it did.
And it did. That's my first zone. So now I'm going to do a zone below it, and then a zone below and a zone above it. Okay. So I'll add 20 more cents to this line right here. Just paste it, double click on it, and this should be, what was that, 64,700?
Yeah, 64.
Yeah, and price is looking to react around that same area, right? So now I've got this broad zone. Now I'm gonna do one below this line. So I'm gonna paste it again.
Oh shit.
What was that, 24? So it should be $1.4700.
Wait, okay. Wait, is that? Oh, this is the monthly. Okay.
Yeah, this is the monthly. Now, there's no history for this point, but just using the quarters theory as itself, that should remain as a valid price level if it touches or if it gets that low. All you need is 3 broad zones, okay? Because price isn't going to move too much in a month, couple months, 3 months time. So you should never have to really move these too much or mess with them. Now from there, you can go to the weekly chart and use the whole fib tool if you want to, but all we're looking for is the halfway point between these zones. So some simple math does it just fine. Basically 144, 164, half of that's going to be 154, 700 and half is 350. So 154, 350 is where that next line is going to be. I'll just change my template to a mid-range. Customize a little bit.
So do you not even draw the fourth quarter? Because you just know where it's at in your head.
Kind of, sort of. Like on the 4 quarters, like breaking it down even beyond this, that's real good for like intraday trading and stuff like that. Like I'm more of a swing trader, so like I don't really draw those.
Okay.
Okay.
No, I meant like right now you only have 3 quarters, right?
No. I've got 3 1,000 pip zones. The quarters come inside these zones.
Wait, you have 3,000 pip zones?
Yeah. 2,000 pip zones. This is a 2,000 pip zone. This is a 2,000 pip zone, and then this is a 2,000 pip zone.
So you got 6,000 pip zones total.
Yeah.
See, okay, so I was doing it wrong. Okay, so total you should have 6,000 pips instead of 2,000 pips total.
Correct. Okay, so yeah, let me explain it to you in another way then. So each of these zones, you're going to break down into the quarters theory. So you should have 3 zones with 4 quarters in them.
Okay, so 3 zones with what? 3 zones. Why is it 3 zones?
Because you want to account for the price movement when it goes up or if it goes down. If it breaks within these zones. So
one zone's a quarterly, one's a weekly, and one's a monthly, or whatever. Not quarterly, but one's weekly, monthly, and something else.
Kind of, sort of. Hold on. I'll finish drawing it for you. So let me go back to the month chart then real quick. All right. So from this red line to this red line is a 2,000 pip range.
Yeah.
What we're going to do, if we divide that pip range into 4 quarters, that's the quarters theory.
Okay.
We draw 3 zones to account for price if it breaks out of that first quarters theory zone. You see what I'm saying? So that way you don't have to go back and redraw it. Okay. It's already drawn for you. And that's really all it is. So you could have done this quarters theory and been okay, but you really want to draw another quarters theory above it and below it to account for price movements.
Okay. And you start your zones off at 124,700, right? That's where the low was.
Yeah, that's where the most recent low is, right here. 121,700. You look left to validate it, and it looks like a valid one. Now, I could have been more precise and used this low since it has more history points, which is around the $1.15, $1.16 area. It's like I said, it just depends on when you come to the charts and mark it up. You know what I mean? It's still going to be valid. Weekly chart to get your mid ranges. 154.350 minus 220 pips or 2,000 pips. Copy paste, which is going to be 134.350. $134. What was that?
So if I do 3 zones, or if I do, let's have no GJ, right? Because all I really trade. I'm trying to focus on one pair. I'll probably get more because you said mark up some other one.
Right.
But if I'm doing 3 zones, 2,000 pips each, and so I should have 12 quarters each.
You should have
12 quarters total.
1, 2, 3, 4, 5, 6. Yeah, I mean, if you do the whole quarters theory, yeah, you should have 12 quarters.
Okay, I got you.
Okay. But me as a swing trader, this is all I typically do. I'll just split them in half. So I have halves. All right.
Yes. Okay.
And that's all you do for the quarters theory as far as how I do it. Now, when you break yours down, you'll still have to even those halves. Okay. Like you said, 12 quarters. From there, you can go to the weekly chart. The daily chart, and then this is when you use your your rectangle tool, because around these levels there should be an institutional order block. But before you get that far into it, you want to highlight just more recent swing more recent swing points in price. Okay, with the rectangle boxes. The reason why we use rectangle boxes and not lines is because we're going to redefine these rectangle boxes when we get to our entries.
Okay. and the rectangle boxes that you're drawing, like, is there a certain, like, there's no rhyme or reason for, like, how big you're doing it, right?
Right. There's no. It's just you're just basically drawing these so that way you have a way to visualize, hey, where the most recent swing points are on the daily chart.
Okay,
So,
and then you go back in later on a smaller chart to kind of make it smaller or bigger, basically, to see where your entries are.
basically, yep.
Okay.
And then so let's say now we've got those drawn. After we do the quarters point, got your swing points drawn or whatever on the daily chart. Then you can apply like a Elliott Wave, so that way you have a projection of what's going to do. So this is the most recent swing low. So this was going to be your 0 to 1. It looks like 2 might be ending. And then,
okay.
So this wave 3 right here, you can use your fib tool.
1, 2. Okay, yep, I got you.
Yeah. You can use your fib tool to see where about almost wave 3 should end around, which again, it should end around the mid-range or a quarter point before you take profit, right? Before it enters another retracement. Let's see.
So from 1 to 2, right? So at that 2 point, it should go back in there and retest the 2, right?
Yeah,
and
you
then
should
go
see
back into the 3 and retest the 3 and so on and so forth.
exactly. So that's typically how it does. So now that you've got your first swing low hit right here, even though it shifted away, you want to see that shift away, yeah. But you ultimately want to see that next retest fail in that same zone before it shifts up. Okay. Because what's going to happen is there should be an order block. Any strong trend move like this, guys, like this, any kind of trend move is kicked off from an institutional order flow. So if you can identify that, you're then able to identify almost when exactly to like the exact timing of when a move like that should happen. Like it gets real deep.
Okay, and quick question: as far as your Elliott Wave,
yeah,
do you use that as like a support and resistance? Like as far as like I know right now you didn't draw it up like that.
Right.
Let's say I wanted to draw like from 0 to 1, like from that bottom red bar to the top on the outside.
Right.
Would you do that or no?
No. All this tool is doing is helping you identify the waves. It's not support resistance or anything like that.
Yeah, I just didn't know if that was if you could do it like that,
Yeah. No, I'm not too sure you actually can really do it like that, because what's going to happen is like Elliott Wave. What Elliott Wave is for is to help you understand the market psychology, because each of these waves from wave 1 has different properties and different characteristics than wave 2. It's got different properties than this wave right here and this wave right here. But one of the guidelines of Elliott Wave says one of these impulse waves up should trend more to equality as far as their movement in price. Another guideline of Elliott Wave says that this wave right here should be the largest, the extended wave or the largest movement in price. Typically, wave 1 and 3 are about the equal length in price. Another guideline of it is on your retracement waves, which is waves 2 and waves 4. That's your guideline of alternation. What that says is if wave 2, which is this retracement right here, if that retraces deep within wave 1, this retracement should be a shallow, like either a shallow zigzag or a shallow flag or something like that. You know what I'm saying?
Okay.
So like there's different guidelines that you basically look for when you're using Elliott Wave. That helps you trade tremendously.
I got you. Oh shit, bro! You know how that's real. Look at the monthly on GJ. Looks like that's up to be did you see the W?
Yeah.
So with that, as long as that retest is right, shouldn't that really that's.
So what you would see is let's say this would be wave 1. Here's your wave 2 retracement.
Okay.
And it should pop up.
Yeah.
This high hasn't been tested as far as with a nice impulse move.
Yeah.
Okay. So it's going to go up to test this high. or it should. In world of Elliott. Another thing is down here, there's a nice order block or institutional order flow. This retracement right here should honestly be in between the 786 and the 886. Let me see.
On the fib, right? So you do it from
from the low to high.
Low to high, high to low.
Yep. You follow when you're looking for the retracements, you want to fib the impulse leg or fib the actual impulse move, the trend move in the direction of it, okay? And then this retracement, like I said, should be in between the 786 and the 886, looking to pop back up. Damn. So there's an order block around here.
That's great.
Yeah, man, this is all material we're going to be covering this year, bro. I'm pretty excited about it.
Yeah, because I'm tired of getting losing money off of office. If I would have knew about this stuff, like sometimes I lose my money because I don't know when to exit or when to enter and stuff like that.
Oh man,
or exit more so.
I'm helping you out with all that shit, man.
Yeah.
All that. That's what I figured a lot of people on Facebook are actually missing as far as like when to enter, when to exit, their targeting, and their risk management. Now, the really big key piece I want you all to use is the risk management, and I don't think y'all have went over that just yet. That's probably the biggest nugget in the whole training is the risk management and how to calculate what size lots to place and things like that.
Yeah.
So it's gonna get y'all together, man.
That's why I have a problem. Super lots.
Yeah, bro. So let me see. Let me pull up this training real quick. It's pretty dope, man. Is this it?
So I'm about to try to draw this fib out real quick. So
here we go. This, I would skip to the last section, guys, and read over it. Just that way you all can just get an understanding of how to gather your risk management and stuff like that, and how it's calculated. Basically, like it's a nice, easy, simple calculation. Okay, so basically, what you do to determine the amount of risk. Let's say if you want to risk, 2 to 5% of your account on each trade. Basically, what you do is, let's say you have a $500 account, right?
Mm-hmm.
You take $500 and then you multiply that by, let's say we want to risk 3%. Hit 500 times 3, hit the percentage sign, hit enter. That's going to give you the amount to risk. On the $500, 3% of your account is $15. All right.
Okay.
So if you want to know how wide to set your stop loss to risk $15, or how much drawdown you're able to do on $15, where's the next page? You then take the risk amount of money, $15, and divide that by, let's say, if your trade uses a 30 pip stop loss, right?
Okay.
So you take the $15, divide that by 30. 15 divided by, that's going to give you a 0.05. Now what that means is you're going to use 0.05. You have to move the decimal place one spot to the left.
As far as the 0.05, that's your
lot size. So basically, you can place a 0.05 lot size with a 30 pip stop loss, and that's going to risk 3% of your account. So what that looks like on the chart, let's go to the 4 hours. Cut it, hey, cut it, hey. So let's say, where do I want to use? Let's use this right here. Let's say we was looking to short right here, right?
Okay.
Let me try to blow this up a little bit. We're looking to short right here. On this candle with a 30 pip stop loss. So I would typically fib on this swing first just to see where price might hit as far as like an extension, which it hits an extension before it makes its move to gather some more equity, right? My stop loss would go 30 pips above this point over here. So what is this right here? This is at, let's say it's at 144.731. Since this is on a JPY, I would double that up to 60 pips.
Okay.
All right. Because these typically move a hell of a lot more than like your majors. All right.
Yeah.
So, but we're going to stick with 30 because that's what we got from the calculation. So 30 pips from, let's say 144.730. I would put that at, let's see. And then I put a loop in it. Wait, what was that price I said? 144.730. I would damn near put that at 144.800.
So 70 pips?
Yeah. Doubling it on the JPYs, remember?
Okay, yeah.
So what happens is it comes up here to what? What is this right here? It hits my stop loss. Even hits my stop loss at double. But that still doesn't make it invalid because you're still overall in a downtrend.
So
it
at
still
that
would have took
point,
us off.
stop loss, do you re-enter or what do you do?
And once you hit your stop loss, I'm going to reassess the trade. Now, if it's still like, if I see something like this, I'll re-enter after this candle right here.
After the long one?
No, after the short one. Like if after it hits my stop loss up here, I'll re-enter if it goes short again with a nice 3 candle formation. Because now it's back into the same zone, and if price really wanted to go up or continue up, you have to remember, look where you're at. You're at a monthly, nice strong monthly key level. If price was really going to go up, this second candle should have kept going.
Okay,
Not only that, it shouldn't have been a nice strong move back into that same zone. So that's when you could have re-entered short.
Wait, okay, so after that short, that long, I mean that big short candle.
Yeah.
I mean, so exactly where would you enter? After the doji or after the short, or on that long short one?
This on the 4 hour. I would have entered right after this one, experienced a little bit of drawdown, but ultimately still profited because I would have known that hey, price isn't going to look to go long because you have to look at where you're at on your charts. The nice key level. And then you have this previous structure over here.
Once it broke the key level, you knew it was
right. Once it broke up above bullish right here, I'm looking left to see, damn, what's going on. When this second candle right here on the 4 hour chart, along with this, didn't break this previous structure, and it went bearish again, that's your entry, bro. Plus you have to understand that on a consolidation range like this, there's a liquidity pool. Depending on the trend. On this bullish trend, there's a liquidity pool right here up above it. If people are already thinking go short,
it's bullish.
Right. Oh, yeah. Your broker, your market maker is going to go long to grab some of that equity that's right here.
Yeah.
Before it makes its real move.
Stop loss with that.
Exactly. So that's what you're really looking for. And honestly, the smart money moves, they sold against this move right here.
Yeah. Okay.
So, and
that's what I've been. So what happens is I've been like that green candle that bullish one. I'll be selling right there. Yeah. But my issue is like I don't know exactly like I didn't maybe the fib would help that, but I didn't. Maybe half that bar up, I would maybe sell it. That's where the support line is. You know what I mean?
Yeah.
And then it would go up a little bit more, and I would I don't know if it was, but I would double up. Right. I would sell it again.
Yeah, okay. I mean, that's certainly fine. Don't get me wrong to be able to do that, but you just have to understand your whole trend and where you are as far as like where you are within a trend. Now,
and risk management, like you say.
Exactly, risk management. That's big.
That's why I messed up.
Yep, that's big, bro. Y'all got any other questions for me today?
Nah, man, this was good. Okay, so hold on. I'm drawing the pip right now. I took a little short. Right, I took a short off of that where the pounds are right now. I know I was going to retest it, but I took a short because there's a lot of
It's a lot of movement right there, man.
yeah, but I mean I took a small short, right? I'm only just 1 cent my account. I damn near blew my account today. So I do my fib right from the bottom. So from like
you can do
I
it
do it from 137, 155.
Yeah,
I think right around all the way up to the what is that, like 140, 183 or 93? I can't see.
Yeah, somewhere around there.
Right?
Yeah, somewhere around there. Now, since price is kind of like trading sideways, this does kind of constitute as a valid high now.
Okay, yeah, and that's why I took it because a lot of consolidation right there.
Yeah, that consolidation.
Okay, but okay, so I needed. Okay, how do I change my my Fibonacci? I have 0.0, 22, or 23, 38, 50, 61, and 100. Or is that what it's supposed to be?
Yeah, that's what it's supposed to be. Now, you want to eventually add in the 786 right here.
Okay, how do I do that? How do I do that on Trader's Way? I mean, on the Forex book or Metaphor.
On your metaphor chart.
Yeah.
Hold on.
Can you?
Yeah, you can. You can add in stuff like that.
I know you can't change it on mobile though.
Well, you have it on your mobile too.
No, I have MetaTrader 4. I don't
Oh,
use it.
okay.
All right. So let's say when you're using your fib, let me pull this up on MetaTrader 4. Right click on it and then click on Fibo properties.
Yeah.
Incoming mail.
All right, so you got that. Now below the 100, what you're going to add is 1.618 under the level column, and then you would just type in as 161.8 under the description.
161.8. Okay.
Yeah, 1.618.
Okay,
under
gotcha.
the level,
Okay.
but as a description, it's the 1618.
Okay.
And then you would do that for the 2618 if it's not already there. You can honestly delete those two. I don't really use those.
You said wait. So okay.
The 2618 and the 4236, those are extension levels, which I don't really use those too much. So you can leave them or you can delete them.
Okay.
But these next couple of ones, this 0.786.
Oh, she'll keep doing these wrong. Okay. So I'm trying to make. I don't know if I have all these on here. So okay. So he says 0.786. I got you.
Yeah. And then it's going to be 0.886.
Okay.
And then you have the negative 0.27.
Negative 0.27.
And the negative 0.618.
6.8. Okay. Are those okay? And those are the negatives are for stop losses or no?
They're just inverse extension levels.
Okay.
Yeah.
Okay. Cool.
So what this looks like on the chart is now you've got your extension levels above. You got a couple extension levels below. Then you've got your 786, your 886.
So for the extension level, let's say I think I have a solid resistance. Support line, right?
Yeah.
And I think it's going to turn into an uptrend. I can draw out that Fibonacci, and that extension, the negative extension is like where if it does go down, this is where it'll probably go down to.
Exactly.
Okay, I got gotcha. And then is the Fibonacci? Let me check the PowerPoint again. I feel like the Fibonacci. Actually, no, I have an actual other one too. So I'm good. Okay.
You good to go?
Yeah, I'm good to go. I'm good to go, bro. I'm good to go.
Hell yeah, hell yeah.
This is super helpful.
All right, man. Well, I want y'all to try to mark up those charts, your favorite pairs or whatever, and then, like I said, we'll either get back on either later today or tomorrow afternoon, and we'll review, go over some stuff. I'm trading tonight too, guys, so be looking for me to maybe call a signal. I might even post a link for y'all to hop on, and we'll look at some trades so that way I can walk you guys through my psychology and how I'm gathering my trades and stuff like that. So.
Okay, but what time do you think you're hopping on?
For the trade session, probably maybe around midnight is when I'll get up to look for it, just so I can have a forecast. And then I'll hop back on.
Where you at again?
Huh?
Where you at again?
I'm Eastern Standard Time, Louisville, Kentucky.
Okay, so 9 o'clock in my time. I got you.
Yeah, and then I'll probably hop around 2:30 or 2 o'clock, so that way we can execute it. So.
Okay.
It's lit.
It's lit, man. I promise you. Hey, man, this training, dog. I got so much stuff. Hey, man. Like I said, this is just the foundation of everything, dog. Like, when we really get going, y'all gonna be some beasts, dude. Like, real talk. Y'all gonna be some beasts, man, because, man, it's too many nuggets. What I really need y'all to focus on, though, is put it like this. Even if y'all don't want to trade full time, bro, if you catch like 25 pips a week and just compound that, bro, you make millions in 10 years. That's just off of 25 pips a week. Like, that's insane, dude. You know what I mean? So, like, I'm giving you guys to literally flip your dollars into millions, bro. What it really comes down to is you guys really having the discipline to stick to a trade plan, to catch your certain setups, catch a certain amount of pips, and just be done for the day. You know what I mean?
Yeah.
Like, you ain't even got to trade every day of the week, man. You know what I mean? But it's still good to, get on and study and maybe look at a chart and predict what may happen. Yeah. But even with this training, guys, like you're not going to win every trade, but you should win a nice high ratio. Don't get me wrong. You know what I mean? If you really sit down and get to it and just study the material, because it's some nuggets in this shit, man.
No, definitely, bro. I see the potential in overall, like, this is what I want to do full time. You know what I mean? Like, even like you're saying, don't need to trade full time. Like, my idea is to have I'm gonna have 2 trading accounts. One account to be like my trading plan, like this is what I'm sticking to. This is what it is. Another account's like just intraday trade.
Exactly.
So,
I've always been recommended, have 2 different accounts with 2 different brokers, because you don't want to keep all your eggs in one basket, basically.
Okay, I got you.
And that helps you, let's say if you lose your day trade account, you then have a second account where you can take like little deposit from or something like that, and refund your other account. But yeah, man, it's gonna be litty, dude. February, I believe, is when I'm really starting on my trade plan to catch my set 80, 90 pips a day, 4 days out of the week, and be cool with it. You know what I mean? So hey, I'm ready, dog. Like I said, I'm trying to see how many millionaires I can create with me, dog.
Bro, you ain't been rocking with me, man. I was trying to holler at you about that plan I had.
Oh yeah, the trade house.
Yeah, bro. It's gonna be real,
I need to get over to the West Coast, man.
2 people, bro. Oh, go ahead.
So I need to get to the West Coast, man.
Yeah, it's